It's Wednesday, October 31st. It isn't every day that the Reserve Bank of India, known for its restraint, is combative in public. At least two speeches recently made by top RBI officials underscore the extent of the friction between the central bank and the central government. In a speech delivered on Friday, Reserve Bank of India Deputy Governor Viral Acharya warned that the risk of undermining the central bank's independence are potentially catastrophic, and that rash moves could trigger a crisis of confidence in capital markets that are tapped by governments and others in the economy. Governments that do not respect central bank independence will sooner or later incur the wrath of financial markets, ignite economic fire, and come to rue the day they undermined an important regulatory institution. Strong words. So, what is the provocation for the RBI's very public expression of discomfort with the government? Here are 5 recent flashpoints. In the wake of the Nirav Modi 13,000 crore fraud at state-owned Punjab National Bank, Finance Minister Arun Jaitley questioned the regulator, which is the RBI's, role. In fact, on Tuesday, the Finance Minister went further, saying that the central bank looked the other way when banks gave loans indiscriminately between 2008 and 2014. It is this indiscriminate lending, Jaitley has maintained, that led to the huge pile-up of non-performing assets, NPAs. Now, RBI Governor Urjit Patel had earlier responded strongly, asserting that the RBI did not have the same regulatory powers over public sector banks as it does over private banks. For instance, the Reserve Bank of India cannot replace the management and the board of a public sector bank or revoke its license. There is a system of dual regulation by the Finance Ministry in addition to the RBI. Now, as an example, in case of private sector banks, the real deterrence to fraud arises from market and regulatory discipline. A private bank failing to meet bank solvency standards and under RBI's prompt and corrective action would find it hard to raise capital, whereby it would need to put its house in order so that it can raise funds from the market and get back to the growth path. There are also incentives to invest in governance so as to limit frauds and regulatory violations. In contrast, this market discipline mechanism for public sector banks is weaker. Why is this? Because the government or the sovereign owns these banks, so there is implicitly a stronger perceived sovereign guarantee for all creditors. Perhaps since the original idea behind bank nationalization was complete government control over credit allocation, in India, RBI's regulatory powers over public sector banks are weaker than those over private sector banks. The RBI's prompt and corrective action is another flashpoint. There are 21 public sector banks. 11 of these banks are operating under emergency measures, the prompt and corrective action framework of the RBI that restricts fresh lending. Now, the prompt and corrective action has been described as a regulatory intensive care unit for sick banks that have deep holes in their balance sheets. The objective is to try and reduce the stress on the balance sheet within a specific time. However, the government has asked for a relaxation of these norms, saying it is impacting the lending ability and therefore growth. Viral Acharya in his speech says, sweeping bank loan losses under the rug by compromising supervisory and regulatory standards can create a facade of financial stability in the short run, but inevitably cause the fragile deck of cards to fall in a heap at some point in the future, likely with a greater taxpayer bill and loss of potential output. Another point of contention has been who will regulate India's payments ecosystem. An interministerial committee set up by the government has recommended the setting up of a separate payments regulatory board, which will have oversight on payments, which is, for instance, transactions done through e-wallets. Now, the Reserve Bank of India sent a strong dissent note to the government questioning the need for a separate payments regulator, saying, in India, the payment system is bank-dominated. Regulation of the banking system and payment system by the same regulator provides synergy and inspires public confidence in the payment instruments. There has been no evidence of any inefficiency in payment systems of India. The digital payments have made good and steady progress. India is gaining international recognition as a leader in payment systems. Given this, there need not be any change in a well-functioning system. Another issue has been the government's choice of directors on the RBI board in a departure from accepted practice. The government recently appointed Chartered Accountant S. Gurumurthy, associated with RSS affiliate Swadeshi Jagran Manch, on the Reserve Bank of India board. There is also the tussle over resources. The government is of the view that the Reserve Bank of India is sitting on excess capital and must transfer some of it to meet the government's fiscal targets. This debate, though, is not new and has been going on for at least 2 years. The RBI has said having adequate resources is a part of the central bank's independence. The RBI believes the use of such a transfer would erode whatever confidence that exists in a government's intention to practice fiscal prudence. Also, that in theory, a central bank can implement monetary policy with a wide range of capital levels, including levels below zero. In practice, though, the danger is that it may lose credibility with the financial markets and public at large, and may then be unable to attain its objective if it has substantial losses and is seen as having insufficient capital. Deputy Governor Viral Acharya puts in context some of these differences using a cricketing analogy. He says, a government's horizon of decision-making is rendered short, like the duration of a T20 match. There are always upcoming elections of some sort, national, state, midterm, etc. This myopia or short-termism of governments is best summarized in history by Louis XV when he proclaimed, "After me the flood." In contrast, a central bank plays a test match, trying to win each session, but importantly also survive it so as to have a chance to win the next session and so on. The central bank is not directly subject to political time pressures by virtue of being nominated rather than elected. Central bankers have horizons of decision-making that tend to be longer than that of governments, spanning election cycles or war periods. But will RBI Governor Urjit Patel stay in the hot seat long enough? At least one report indicated that, like his predecessor Raghuram Rajan, Patel will not be given an extension once his term ends. A video journalist working for state broadcaster Doordarshan and 2 policemen were killed in a Naxal attack in pole-bound Chhattisgarh's Dantewada. Achyutananda Sahu and his team were filming in the area as part of DD's pre-election coverage when they were ambushed by Naxals. Just 4 days ago on Saturday, 4 Central Reserve Police Force personnel were killed in a similar attack in Bijapur after Maoists blew up a mine-protected vehicle. The officer investigating the CBI Special Director Rakesh Asthana bribery case, Ajay Bassi, on Tuesday moved the Supreme Court, challenging his transfer to Port Blair. The plea describes the transfer order as malified and an effort to influence the course of the bribery investigation. Bassi claims he has incriminating evidence against Rakesh Asthana, against whom an FIR was filed for taking a bribe from a businessman who was being investigated by the CBI. It is after the filing of that FIR, which had the sanction of CBI Director Alok Verma, that the government, in an unprecedented move, removed Verma as CBI chief. Asthana too was sent on leave. The Supreme Court on Wednesday said it is amending the 8:30 to 10:30 p.m. timing specified in its earlier order for the bursting of firecrackers for southern states like Tamil Nadu. The Apex Court has asked state governments to decide the timings, which could be staggered as long as the time does not cross 2 hours. This came in response to a plea by the Tamil Nadu government stating that Deepavali in the state is celebrated with the bursting of crackers early in the morning. Meanwhile, firecracker manufacturers have raised doubts about whether they will be able to meet the Diwali deadline for green crackers. The Supreme Court is expected to pass orders today. China doesn't want its people to bury their dead. As a matter of fact, 4 cities of the country have reportedly banned the practice. Burials, according to the state, take too much space, often arable land, and are a waste of money and wood. Further, according to state calculations, all burial land will be exhausted by 2022 as an elderly population near the end of their lives. Burial grounds have been shut down, confiscated, and officials offered incentives for organizing cremations, something that quickly escalated. In one case in Guangdong, The Economist reports, officials hired grave robbers to exhume bodies from neighboring villages so that they could meet their cremation targets. This year in Jiangxi, officials went door to door confiscating coffins. Coffins were piled up, destroyed, and the elderly told the wood would be used to generate power. The move saw huge backlash, with activists protesting by lying down in coffins, refusing to move. To several Chinese, coffins are a symbol of status and are bought and stored years in advance. That's it then. See you tomorrow.